Good morning. Welcome to the XM.com weekly market update. And with me once again is Peter McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
Plenty of data once again, plenty of volatility. We'll start domestically as we always do. The CPI numbers came out last week, or the indicative numbers, and they ticked up slightly, which is not what the RBA would have wanted.
No, and next Tuesday will be first Tuesday of the month, and I think it's a toss of the coin now with that sort of number. It's a 50-50 sort of thing. We've just got to see again what happens as far as this week reporting from US and other major economies. But yeah, there's every chance you could see a rate rise. I'm too hard to call, so I'm just going to sit here and observe it, I think.
Yeah, and I think the new governor, she's certainly indicating that
she's got the guns out and ready to blast.
Certainly has, so it wouldn't be surprising to see another 25 basis point rise.
No.
But on the back of that, with the Aussie dollar, it's a nice little rally.
It's been showtime.
Yeah, partly due to the potential higher interest rates here, but obviously strong US equity markets, US dollar weaker, so the risk-on currencies are having a day in the sun.
You bet. I mean, you look at that, it was 62, high 62s. It's had a 4% rally to the upside, 66.55 right now on Bloomberg, and that gives you an idea the huge volatility and uplift that we've seen in the Kiwi dollar and nearly every currency against the US. 102.72 is the US dollar index, and even the yen's had a great run. I mean, it's back to nearly through to 147 at high 146s. So, you've got a euro at 1.10. Wow, it's, you can see the attraction, currency traders, and this has all happened this month. We're at the 29th today.
Yeah, it's certainly changed in the last few weeks. So, speaking of the US, inflation numbers coming down, the PCE numbers are out tomorrow.
Yep.
GDP numbers are out tomorrow as well, and the economy is very strong at the moment.
Very strong. Yeah, thinking about 5% as far as annualised growth for that GDP, so it's up from 4.9%. We're just going to sit here and see the numbers drop and see how that impacts naturally equity markets and, US dollar. What happens as far as King Dollar.
Yeah, that's right. We've just come off the back of earnings season as well, and once again the US markets have stood up pretty well.
Sure have.
Not surprisingly, the NASDAQ numbers are slightly higher than their all-time averages.
Yep.
S&P is pretty close to it, but with the NASDAQ, those tech companies, huge valuations.
It was outstanding for them, wasn't it?
And I think it was roughly sort of around 75% of companies beat expectations and forecasts. So it's the resilience of that market is extraordinary.
Yes, it is. 18.8 forward earnings for the S&P. So let's just see if it crunches up to 20. If you've got a market that's increasing in value, then naturally your PE is going to rise. So it's we've just got to see again how it rolls till the end of the year. Yeah. I want to see those Black Friday sales, and there's the impact there. How it was strong consumption. Yeah. Those numbers will drop sometime this week, I'd say.
Fairly soon, yeah. So an interesting chart here. It's more of a bit of a stat. Like all year, they've been talking about recession in the US, a hard landing, soft landing, and whatnot. So obviously, the recession hasn't happened. Obviously,
no.
So, but you look at that, stories related to a hard landing. It hardly ticked up at all, but which you can tell that change of mood in the market where the recession hasn't happened, unlikely to happen
anytime
the next
soon.
Couple of quarters.
Yeah, unless something catastrophic happens.
Exactly. So there's always a black swan event. But interesting that you see, and once again, at the back end of the year as well, you talk about that, a bit of an uptick in equities and whatnot.
Yep.
Yeah, you've got to get your numbers up by the end of the year from a fund manager perspective.
So, 1 month to run till New Year's Eve sort of thing.
That's right. OPEC. They're meeting at last.
Yeah, they are. It's going to be virtual. I would have gone to that meeting, but it's virtual. There was a set down for last Sunday, and that was in Vienna, and now it's going to be virtual. Angola, you've got a number of those African nations sitting there seeing how it all plays. Compliance is going to be the hardest point, I think, to police, Andrew, as far as cuts and production quotas and all of those into a mixed bag of into the motley crew of OPEC members. So, it's just going to... how it rolls and who plays ball and who doesn't play ball, these are all the factors that go into, the melting pot of OPEC and leading forward into Q1. So that chart is quite dramatic when you're looking at US production at all-time high at about 13.2 million barrels a day. and it's quite a healthy number, isn't it? I mean, it's monstrous.
Well, it's huge compared to OPEC, and OPEC are looking to cut production to support the oil price. But then again, you've got a lot of economies around the world which are slowing quite a bit.
Yes.
Which therefore the oil consumption
could be down a little bit.
Is down a bit. So which is why we're seeing these lower oil prices. Finally, the bond market, once again, it drives pretty much everything. We look at that, the 10 is now at sort of 4.36%, which is extraordinary considering less than a month ago it was above 5%. And that's a big move in a bond market.
It certainly is, and it's just dramatic, and it's just a washout in a lot of ways. And when you roll that, what would have been interesting would to roll a gold chart on that, and what we've seen, we've got gold now at nearly 2,065. I mean, it's dramatic. What you've just a huge move up here, nearly 2,065 in the last 2 months. You're up the best part of $200, $230. So, let's see how that rolls. Bonds off, gold up, dollar off, showtime.
Yeah, and there's talk in the US that they could have 2 or 3 rate cuts
by June
next year, which seems very bullish to me, but you never know. But
well, you got an election.
Yeah,
Election's
right.
11 months away, and Trump's that far ahead of the band at the moment, and this is what they're all worrying about. So they've got to try and I'm not sure whether Biden's dead man walking. By the sounds of things, I mean, he just can't do a thing right. So maybe they've got to change a batter coming through, and they'll get someone else to sit at the table. We've just got to see how that rolls. But if you're going to roll him, you don't want to roll him 2 months out. You want to get someone that's got some support.
Yeah, and you do it pretty soon.
You would think so. You would, I mean, it comes down to political strategy, and it's going to be one great year to observe. I think we've got to strap yourself in. 24 could be an absolute bumper of a year from volatility.
Yeah, there's always plenty of theatre with US politics in an election year.
You bet. And what better characters or actors to take you forward? Donald J. Trump coming back for a run at the title, and Joseph Biden.
Interesting pair.
Yep.
Time will tell.
Time will tell.
Good stuff. All right, Pete, we'll regroup next week.
I look forward to it, Andrew.
Right, thanks again.
See ya.
And that's the XM.com weekly market update.